Hello, I'm Tim Beggins, president of Elk Trading Company, and this is the top news for natural gas this week. Number one, there's lower LNG feedstock deliveries into both Sabine and Plaquemines LNG facilities, potentially spring maintenance. Number two, Europe is looking to potentially tweak the methane rules for US LNG during tariff trade talks. Number three, the Trump administration is looking to expand offshore drilling plans. And number four, the IEA says that oil demand will look to soften here as the tariff tensions continue. Let's take a look at the spot May contract. Natural gas prices are down, currently trading 312.70, down 11.8 cents or 3.64%. As you can see here from the daily chart on barchart.com, we look to take the retracement from the reversal we had all the way back on November the 4th to our recent high here on March the 10th at 494.60. And we're coming up on a key support level. Right now, that would be just under 310 at 309.90. This is the 0.786% retracement of the whole move. Below that, we'll fall to the lows. But we do have some intermittent stops here. And let's take a look at the hourly chart. The hourly chart is holding for the moment here just above the daily pivot support at 311.40. Next support is down at 303.60. What's causing the problems? Warmer temperatures, some spring maintenance potentially at Sabine and Plaquemines Parish, and of course, the trade tariff wars. So let's take a look at storage because Friday the markets were closed. This storage report, which was issued on Thursday, came in at plus 16. This was a bit of a surprise to the market, about 6 to 7 BCF lower than expectations. Why? Look at the East. It was a minus 6. This is in April. We should be now injecting. This is the injection season, April through October. So this was actually bullish, but the market really could not react too much. Let's take a look at the front to back spreads. This may be the only way to play the market at this time until the tariff wars start to settle down. Looking at the Jan versus the May contract here, we're looking right now at 1602 with overhead resistance here at 180. That's the break even for storage costs per month, about 20 cents per month for this particular time frame. But let's take a look at the OC versus Jan contract. And this spread is already through its break even at $1 and is now testing through that first resistance here at 106.20. We're already through that. And now our next resistance is at 109.80. So again, the front to back spreads are saying we've got weakness up front here because of spring temperatures, LNG facility maintenance, the tariff wars, but it's still probably a bull market in the end. We'll just have to get through this rough patch. And let's take a look at the weather. The 8 to 14-day temperature outlook is above normal for the eastern half of the country. This is valid for right now through the end of April through the first week of May. And let's take a look at the drought. The drought continues to expand around San Antonio, all the way back to El Paso, through New Mexico and Arizona, and parts of Nevada, and parts of even now California. So this is typical of an ENSO neutral year. We'll keep an eye on that because potentially La Nina may not show up. And let's take a look at the temperature anomaly outlooks for the weeks here going forward. As you can see, it's warmer across the eastern half of the country, in particular around the Appalachians and parts of the Northeast. And that expands, including the Great Lakes states and the upper Midwest here, as we get into the last week of April into May. And then it starts to moderate a little bit more towards seasonal temperatures as we exit April into the first week of May and then the second week of May. So right now, again, natural gas prices are down, currently trading 312.80, down 11.7 cents or 3.61%. We are holding here at above that critical support level at 309.90. But again, there's not much here to hold it if this tariff war continues. So please let us know your thoughts in the comment section below. Hit that like and subscribe button. Thanks for listening. We'll see you soon.